Bulls and bears make money in any market. Make no mistake about it. Facts don't care about opinions. Facts don't care about feelings. If the basis is appreciating over time, that is a bearish indicator. If it's getting better over time, that's more of a bullish indicator. People are bullish for a reason. I'm sure they're bearish for a reason, neutral, those type of things, all fine. Bulls and bears make money in any market. Make no mistake about it. Okay, so again, you're asking like, hey, what could we be bullish to? So this is a chart. I call this a naked canola chart. The reason why is there's no technical analysis sitting on here. So if somebody's looking at this chart, it's hard to give some context to where you could be bullish or bearish to. Okay, it's like, all right, well, I think this or I feel that. That's fine, but facts don't care about opinions. Facts don't care about feelings. Hey, let's put some actual, like say, a quantifiable data in there. So I'm a big believer in using, technical analysis to be able to make some of these opinions. You start putting in it, you start putting some real, objective numbers in there. So this is just a chart where I put a few just basic technical analysis points on. Okay, so I'm going to start from the top and work my way down. So this black line on top, this is our current overhead resistance line. And this is just a simple line drawn from the top of what the prices were in the middle of summer. Back when we had a very small carryout, people were concerned about their crops. Hey, we hadn't had that rain yet. We had this big run up here in the middle of summer. It was an excellent time to be marketing grain. And then I still remember the weekend we got, I think it was in June, we started getting about 5 inches of rain across Alberta and in central Saskatchewan. And ever since then, we kept getting more rain throughout July and August, and this market just, crumbled down throughout the year. Okay, so that was the top of the market. At one point in time this year, after harvest, we got down into that, call it $600 or just sub $600 range on the chart. So that would be kind of a low end, and that's here right after harvest here, down this 600 range, and then we challenged it again, so that's our low end of the chart. If you really want to go back a couple, a little bit further back at the low, when China put on their tariff policy on us, we actually got down to around 550, 560. So again, these are just objective places on the chart where you start drawing lines. So at the top of the market in the last year, the bottom of the market in the last year, pretty good ranges. So the next one that I would kind of put to here, and this was once resistance, but it's now support, is right in around this $660 range. Okay, so the reason why that one is there is because that was a high of the market after harvest, right before the StatsCan report that cratered us down into that low 600 range. Now, since then, we've had an amazing rally, almost too good of a rally, and we've worked ourselves all the way up here into that kind of, low $700 range. Okay, so these are just basic support and resistance lines. The pink and green line, what I have on here is the pink line is a 100-day moving average, and the green line is a 200-day moving average. So the reason why these lines are on this chart is because every trader in the world that trades against farmers, and I'm not saying they're bad people if they trade against you, but your brokers, your elevators, your crushers, these guys will all have these moving average lines on this chart, on their charts making these decisions. So again, these are just, basis. These lines will tell you, hey, are we in an uptrend or a downtrend? Okay, so again, just basic kind of, parts on the chart. And then down here on the bottom, this is what we call a momentum indicator. And this is, I particularly use relative strength index. It's just one of the different oscillators that you can have out there, and it tells you if the market is overbought or oversold. So these blue kind of lines above here, down here on the bottom of this chart, that would indicate to us that the market is overbought. There's been more buyers than sellers over a period of time. And that generally should be a watch out for people. If the markets get overbought, they likely should come down, just like if they get oversold back here in January, it's likely to go back up. Doesn't mean it's got to move back up in that immediate day, but again, it's just an indicator to say, hey, are we getting too high or too low? Okay?
Ryan, are you able to adjust that screen to enlarge the charts? Because I just had a comment here that I think what we're getting on your share is presenter mode, not to interrupt your flow, but I think people are just wanting to zoom in on that chart a bit if you can. If not, that's fine. But thank you for that comment, by the way. Sometimes I know if you got multiple screens, it can be a little bit difficult to get it full screen. It's not a huge deal, but I feel like this rally's been a little bit premature, and of course, there's all kinds of geopolitical and news type things that are stoking it. It's good to know that canola wanted to go there, and it's good to know too that in your professional opinion, I think it could go a little bit further. But question
Is this better?
That's so much better. Thank you.
Okay.
Thank you, Turner.
No problem. Thanks
Keep
for
going. Yeah.
pointing that out there.
I did have a comment too that maybe you can weave into this because I appreciate the comments here from Dean York. Futures are one thing, but $70 basis has killed the net price for buyers. To cover all risk, buyers are talking price to the farmer with a fat basis. $50 a metric ton new crop basis is not the norm at this time of year. Is it not?
Yeah, and I'd comment this on basis. The wider the basis is, generally the buyers are saying, hey, we don't need this much canola. That's the general comment. So as the bases have gotten worse, as we've appreciated in this, that tells me buyers are more reluctant to buy these higher prices than they currently are. Now, as the markets go up, those buyers are more likely to be able to convince farmers to take those bases because the net price is still above $15 a bushel. So by no means are bases good. I think they're atrocious historically right now, but if you compare it to, if you're near 730, 740 futures, a 60 under basis is junk, but it's better than a 500 futures with a 20 under basis. Sometimes you can't get both, is what I probably try to convey to everybody.
Is that a bearish indicator in itself?
Well, one day of a basis is not a bearish indicator. More what you'd look on a basis is how is the basis trending over time. If the basis is appreciating over time, that is a bearish indicator. If it's getting better over time, that's more of a bullish indicator. So it's not necessarily a 60 under today, which I would look at to say that's bullish or bearish, but what was it last week? If it was 50 under last week and 60 under this week, that's a bearish indicator. Now, if it's a 60 under this week, but it was a 70 under last week, that would tell me that's a little bit of a bullish indicator.